Okay, good morning, everyone. You all are warmly welcome to today's webinar series. So today's session will be conducted by Mr. Viraj. Today's session is on value-added tax, as you all know. So Mr. Viraj, he is a certified tax advisor and a member of CA Sri Lanka. And also he is a member of uh, AAT Sri Lanka. So, Mr. Viraj, you're warmly welcome to the session and you could start the session now.
Hello, good morning to all of you. Hope all of you can listen to me, you can hear me. And as Aruni correctly mentioned, today our topic is all about value-added tax. And what we need to discuss today, basically how to calculate VAT liability for a general example or a general business. In addition to that, we are going to discuss VAT on financial services and tourism VAT refund scheme. Likewise, there are many areas where we need to touch during course of the day. Actually, we are having only 1 hour's time, but I'll try my level best to complete all the areas. And at the same time, as usually, because this is what I have done in Sinhala medium as well. So when I'm doing it, I always want to interact with you. So I'll be sharing my presentation right now. And what you need to do basically, uh, you just go to this particular website. If you're having your mobiles in your hand, just go to www.menti.com, www.menti.com. Then you can use the code of 614541, 614541. So when you use that code, this particular presentation will comes to your mobile and you can see this one. If you join with me, just put a heart mark or else just click that one. Then I can identify how many participants are interacting with me right now. I'll give 1 to 2 minutes for you all of you to log into this webinar, because then only we can do this interactively, and I'll be asking some questions as well. So when I'm asking the questions, if you are in position to get the first place, because I'll be selecting who is giving fastest answer. So out of that, I'll be giving this book. This also written by myself. Earlier also I gave the same thing. So one of you can get this book if you are interactively connecting with me, right? Okay, I can see 2 people have joined right now. Okay, 3, very good. Because my first slide also, it's going to be a question, because you need to start with the questions. So with that only we can go ahead. I'll be wait another 2 to 3 minutes for all of you to join. Good. 6 numbers are there. Okay, I think it's better to start now. Anyway, I'm starting with the questions as I told you. Right, you can put your name. Right. This is my question. Right. Anyway, a small technical delay is there. But most of you have correctly mentioned the top revenue generating tax type to Sri Lanka in the revenue department is, as you correctly mentioned, VAT, not the income tax. I'm just showing you the some of the figures which are relevant to the government income. You can see here, out of total revenue, the main component is receiving from VAT, value added tax. Even as a percentage of GDP also, we are getting the VAT. So the correct answer is value added tax. So you can understand the gravity of this subject and the importance of this tax type, because this is impact to everybody in Sri Lanka. And with that, most of the revenue also is being collected from this source. We'll move to the next slide. Now today, as I told you, I'll be going to discuss few items under that, back on non-financial services supply. So this is our basic, this is our main topic, because under this we have to discuss so many areas, non-financial services, and the other one is VAT on financial services. So VAT on financial services is mainly applicable for the finance sector, but non-financial services are applying to even retail and wholesale, other service providers, manufacturers, everybody is coming under the first one, VAT on non-financial services. Right, we'll see what are those items and the components of that. Now, value-added tax, the main section which is relevant to non-financial VAT is under section 2. The section 2 is elaborating or else discussing what is meant by taxable supply and supply of goods or services in the course of carrying on or carrying out a taxable activity. And the taxable activity is carried on or carried out in Sri Lanka, and supply is made by a registered person. And the last one is importations of goods into Sri Lanka. So what we are going to discuss today, now if you look at these four, the importation of goods, if you take, it's mandatory for you to get the registration if you are doing importation. But other cases, there is a threshold where you need to comply with that threshold, you need to meet that threshold, then only you have to register for this one. Right, basically you need to understand what is mean by taxable activity and what is mean by supply, taxable supply. Those basic concepts you need to digest, then only you can understand the other part. Right, we'll move to the next one. Supply of goods. Now supply of goods, what you need to understand or else what you need to remember, in order to register for value-added tax, any person who's outside taxable goods or services in excess of 12 million per annum, or else we can say 3 million per quarter. So if your turnover is exceeding 12 million per annum or else 3 million per quarter, then you need to register for VAT. Then you can see trade, business, profession or vocation is required to register for VAT. And most important thing is, there are certain goods and services which are exempted from VAT. Such exempted turnover should be excluded in calculating the annual value. It's like this. When you are calculating your aggregate turnover, total turnover, you have to exclude the exempt supply. Exempt supplies under the value-added tax. But anyway, when you consider your total supply or else total turnover, you need to exclude exempted supply. And importers, as I told, all importers are required to register for VAT. If the taxable temporarily, that is we call it temporary VAT. Because if somebody is not registered for VAT, but suppose if he wants to import something to Sri Lanka, he needs to get the temporary VAT. Then only he can clear the goods. So it's mandatory. You need to remember, if you are an importer, if you don't have the permanent VAT number, you need to get the temporary VAT and proceed it. Right. So basically what you need to understand, this is for your exam purpose, 12 million per annum and 3 million per quarter. But remember, this threshold has been changed with effect from 1st January 2020. So 1st January 2020 onwards, now the limit has gone up to 300 million. Now any taxable supply which is beyond 300 million only you need to register. And per quarter it's only 75 million. But the reason that I have not given those figures in this slide is these are not relevant to your exam. But the practical scenario, you need to keep it in your mind. The 12 million threshold is no more applicable right now. Now the threshold has gone up to 300 million per annum and 75 million per quarter. Right. We'll move to the next one. And in this case, another point that I want to tell you. Now here the 12 million mean, if you divide it by 12, month it's 1 million. 1 million mean if you divide by number of days of 30, it's 33,333. It says if somebody is having sale value or the turnover figure is more than 33,333 per day, you have to register for VAT if you are within that category. So we'll see what are those categories. So what you need to make sure, what you need to remember is 12 million is the threshold and 3 million is for the quarter. Then retail and wholesale, this is another area where you need to remember. With effect from 1st November, if you are doing retail and wholesale activities, the 3 months period threshold is 12.5 million. So that means basically per annum threshold is 50 million. 12.5 into 4 means 50 million. So as I told, this is also applied only up to 31st December 2019. 1st January 2020 onward, this also has gone up to 300 million per annum. So anyway, this threshold has been changed, but for your exam purposes, you need to remember retail and wholesale activities, because in your exam, they will be testing only up to the last year. So last year, the threshold was 12.5 million per quarter, and the per annum it's 50 million. Right. And another important question, you all can try now. What is the minimum annual turnover? Right, you need to listen to me properly, otherwise you will not be able to answer the correct one. Because as I told, the particular threshold has been changed with effect from 1st January 2020 to 300 million. So the 12 million is applicable for until last year. So the question was all about the new year, what was the threshold. And as I told, this will not be tested in your exam, but you need to keep it in your mind. This is the current law. Okay, right. We'll see what are the consequences of registration. Once registered, such person must charge and collect VAT even though the value of supply does not exceed the registration threshold. This is the requirement. Now, say for an example, if in last year, if your turnover per annum is 12 million, now you have exceeded, you have got the VAT registration. Now, after that, even for next month, if your turnover is only 10,000, you need to pay the VAT. That's what it says. Because another concept that you need to understand, value-added tax, it's an indirect tax. It's not a direct tax. Direct tax mean it's basically charged on your income, but this is based on your expenditure or else whatever the goods and services consumption. So when because of the VAT, the charging source is different from the indirect tax. Even the businessman or else the retailer, wholesaler, or else whoever the businessman is also acting as a collector on behalf of the government. So what they are doing, when they sell the goods and services, they will add particular VAT amount and sell it to the customer. So they are collecting it and they must remit it to the department because they are working as an intermediary. So this is what we need to understand. So if you have registered, if you got the registration, you must charge VAT and you must pay it to the department as well. So deregistration cannot be done during first 12 months period of registration. Now if you got the registration, suddenly you can't do the deregistration. The cancellation of registration or completion of 12 months or more subject to liability on deemed disposal of remaining stock, assets, etc. prior to cancellation. Did you understood what is that? The cancellation of registration on completion of 12 months or subject to liability of deemed disposal. It's like this. Just try to understand this concept. If you register for VAT purposes, basically you can claim the input VAT. So what is input VAT? Now, as I mentioned, when you are selling, you have to charge VAT. At the same time, when you are getting the goods, when you are buying your goods, you can, it's like this. Just suppose now you are buying 100 rupees worth item. So they will be adding 15% VAT to you. So you are putting your account, you are taking into consideration only the 100 rupees as your cost, but 15 rupees you are putting into the VAT control account. And when you are making payment, because when you are selling that item, just imagine the 100 value good you are selling at a 200 rupees. So 200 rupees you are again charged 15%. So 30 rupees is there. So 30 is you are payable and 15 is you can claim. So you are paying only the balance 15. Then you can understand, once you get the VAT registration, you have an opportunity to claim the input VAT. Now, why they have put this kind of a rule? Just imagine, once you get the registration, suddenly after 12 months, if you close down the business or else if you want to get the re-registration, there can be some goods and services which you have already purchased and you have claimed the input VAT as well. Just imagine you had 100,000 stock and the input VAT also there. Then when you ask for the re-registration, it says deemed disposal of remaining stock prior to cancellation. Even when you are got the deregistration, it says before you apply for the deregistration, when you are selling that item, even if you don't have the VAT registration at that time, that is liable for VAT because you have already claimed the input VAT. So this is what you need to understand, the deemed disposal of remaining stocks. But in your exam purpose, basically what you need to understand is what is the threshold, and during 12 months period, you can't apply for the deregistration. Right, we'll move to the next slide. Interpretation. So I'll be going to discuss interpretation with regard to what is mean by taxable supply and taxable period and year of assessment, and the last one, time of supply. So these are the four basic things that I want to discuss with you. Right, we'll move to the next one. What is mean by taxable supply? The taxable supply mean any supply of goods or services made in Sri Lanka which is chargeable with tax and includes supply at the rate of 0% other than an exempt supply. So these wordings are really important. So what is mean by 0% and what is mean by exempt supply? So taxable supply means it includes only goods or services made in Sri Lanka which is chargeable supply, but not the exempt supply. So what is mean by exempt? I'll be discussing what is mean by exempt supply. 0% mean Now most of the students, they have misunderstood the concept. They thought that okay, zero rate and the same supply both are same. No, this is a two different concept. Zero rated mean, anyway we have a lengthy discussion, explanation is there, but for you to get some sort of idea, 0% mean basically you can't charge VAT, but even though you are not charging, uh, you can claim the input VAT. But in exempt supply, what happens? Exempt, if the particular supply is exempt, you can't claim input as well. So this is the basic difference between the zero rated and the exempt supply. And why they are giving the zero rated? Because mostly zero rated is giving for exporters and people who are getting foreign currency to who are people who are bringing foreign currency to Sri Lanka. And there are many categories which zero rated is applicable. So I'm going to discuss those areas in detail. But in here, what you need to understand is when you calculate your taxable supply, exempt supply cannot be considered as a part of the taxable supply. Right. We'll move to the next one. What is mean by taxable period? Now, this is also very simple. Taxable period, just try to remember. If you're having a short note, just put it only, divide it into two. You have only two periods. One is 1 month, 1 month period, and the other one is quarterly. So 1 month is applicable basically for the zero rated supplies, and any person commits business or projects undertake comply with the requirement of section 227. So I'll little explain what is mean by section 227. So section 227 mean, now imagine, uh, just imagine you are having a condominium property or else big building site or else just imagine a hotel project. Now you'll be doing this construction work for years. Sometimes it takes 2 years, 3 years for the construction project. Then what will happen? During that period, you will be purchasing lot of items. If you don't have the VAT registration, you need to make that payment as well. If you buy cement, if you buy iron, those things you need to pay the VAT. Then your cost will be high. At the same time, you are not in position to claim it because you don't have supply during that period. So because of that reason, Inland Revenue Department has given special permission under the section longer period time to make taxable that requirement until they go for taxable supply. The period only the construction they input VAT, but for that there is a mechanism called SWAT, that one. So anyway, what you need to understand, if you are a zero rated supplier, if you are an exporter and section 227 registered person, you need to go for the monthly basis. And the other most important thing is, if the person is Hello. Right. Hope all of you can see the slideshow now. There's a small technical delay. Now the next period is 1 month, 3 months period, or else quarter. Hope all of you have joined me again. Right. Okay. Now the next one is, as I mentioned, the 1 month is applicable for those exporters and zero rated people, and the 3 months period is applicable other than those people. So you can take it as a period of 3 months commencing respectively on 1st January, 1st April, July, and October. So 3 month period will be applicable for the following person: a person other than A above. If person fails to and opts to submit quarterly returns on approval by the Commissioner General, if he obtain any approval from Commissioner General, then also he can submit the returns on quarterly basis. So what you need to basically understand is, in order to submit the return, you have two options: either you can go for a monthly basis, or else you have to go for the quarterly basis. For monthly basis, Inland Revenue Act specifically mentioned these are the people who can file the returns monthly. So that one you need to keep it in your mind. At the same time, all others are coming under the 3 months period. Right. We'll move to the next one. Time of supply. What is mean by time of supply? Time of supply is a different in different occurrences as follows. The time of supply of goods shall be when uh, invoice is issued, and in respect of goods by the supplier, or payment advance for goods is received by the supplier, a payment for goods is due to the supplier in respect of such supply, delivery of goods have been effected. So whichever is earlier. So what is mean by here? Whichever is earlier mean you need to look at in which stage goods are being delivered. The number one is the invoice is issued in respect of goods by the supplier, or payment, or the supplier is or else the second one is advance, and the next one is delivery of the goods. Okay, you need to look at those things. Yeah, right. Okay, the time of supply, what you need to understand, as I told, whichever is earliest. At the same time, you need to look at however, where an invoice is issued in respect of goods supply within 10 days from the date of delivery of such goods, the time of supply of goods shall be the time at which the invoice was issued. Now, let's take one example. Now you have already rendered your service, or else you have already provided your service, or else suppose you have already dispatched your goods. In that case, if you are issuing your invoice within 10 days of the delivery of those goods, the time of supply is the time at which the invoice was issued, not the time that the goods were received. So this is the most important thing that you need to remember: if the invoice is issued within 10 days of the date of delivery of such goods. Okay, right. Then we'll move to the next one. Then for services also the same criteria. The time of supply of services, again you need to look at when they have performed the service. Number two, payment for services. Then the third one, The payment for services or future services is due, so you can understand the difference. First one is when you perform your service. Second one is service of future services is received, and the third one is due, still you didn't receive it, and the last one, an invoice in respect of service is issued. Here also the same criteria. If the invoice is issued in respect of services supply within 10 days from the date of performance of such services, the time of supply of such service shall be the time at which the invoice was issued. So this is what you need to understand again. There can be situation, say for an example, I am a chartered accountant, so I am providing some consultancy services. So I have already performed my service, but I am sending the invoices within 10 days of the service supplied. Then the invoice date is the date of supply, not the date that I have provided my services. This is what you need to understand. Okay, we'll move to the next one. Supply of services. Now, I want to take you through a practical example. Now, what happens supply of services? As all of you are aware, 2019 November 30th, until that, our VAT rate was 15%. Now, it has reduced to 8% with effect from 2019 December 1st. Now just imagine a situation where you perform your service on 30th, then you issued your invoices on 5th December 2019. So when is then in this example, the time of supply is 5th December, not the 30th November. 5th December is the time of supply because you have issued your invoices within 10 days of the providing your service. So this is what you need to understand. So I'll be testing your knowledge from this also. Keep it in your mind. If goods or services is supplied, after that the invoice is issued within 10 days, the date of supply is not the service or the goods dispatch date or the service performed date. It should be the invoice date. Okay. Right. Then the next one, where a supply is made under an agreement entered into other than hire purchase agreement, which provides periodical payments when the payment is due or when the payment is received, whichever is earlier. But in your exam purpose, always you need to remember about the goods and services. These are for your additional knowledge. This is for other than hire purchase, and the goods are supplied under hire purchase agreement when the agreement is entered into. So then you need to look at when did you enter for your agreement. So that is the time of supply. And where the Commission General has directed any registered person to account for the tax on payment basis. On a payment basis mean cash basis. The time of supply goods and services supplied by the such person shall be the time at which the payment is respect of such supply is received. So what is this? So this is another concept where you need to learn cash basis. Now mostly if you are going for the VAT value added tax, you need to account on accrual basis, but there are some organizations which they need to get the cash basis approval. I'll tell you one example. If you take a company which is providing janitorial services to university, so government universities, they are making long period to make the payment. So in that case, the particular person who is providing that service, if he makes the VAT payment on accrual basis, without collecting money, he is paying from his pocket. So it's not possible in practical world. So in that case, what happens? They are getting approval from Inland Revenue Department to go for the cash basis. Once they get the cash basis approval, what they are doing at the time of providing services, they are issuing only they are not issuing the tax invoice, that is we call pro forma invoice. They are issuing just pro forma invoice. Okay, we are providing that services, but at the time of receiving the money, they issue the tax invoice. So that is what they are basically doing. And for cash basis people, only the time of supply is at the time of such cash received, not the payment or not the supply was performed. Okay, right. So these are the basic things that you need to know. Right, we'll move to another question quickly. Right. Many of you have correctly mentioned that one, because the XM supply is not included. That's what I told in before. Now, cash basis, as I have already explained that one. Again, just look at the most important thing is, if you want to go for the cash basis, you must get approval from Commissioner General. Service providers, including construction contractors, may apply for the. Now, I told you about the janitorial services. Even if you get the construction industry, same thing is happening. Because just imagine a situation where a constructor is doing a building construction for a government organization. So they are taking 2 years or sometimes more than that to make the payment. So in that case, the particular service provider is not in position to make the payment to Inland Revenue Department, because they are not collecting money. So in that case, they can get the cash basis approval. Uh, but the most important thing is they need to get the approval from Commissioner General for this. Right. We'll move to the next one. Compulsory registration. Every person who carries on a taxable activity should register for VAT if the value of taxable supply exceeds or like to be exceed the amount stated below. So what is mean by likely to be exceed mean, even actual basis you have not exceeded, but you might feel that, you also feel that based on the invoices you received and everything, okay, you can see, okay, my total revenue will be increased more than this. For that instant also, you are in position to apply for the VAT registration. I'll tell you one practical example. Now imagine, if a company is trying to go for an agreement, their first supply is more than 12 million. So in that case, they can automatically apply for the VAT registration, because it is likely to exceed the amount stated. Because anyway, from first transaction, 12 million threshold will meet. Right. Then the next one, such person must notify the Commissioner General within 15 days of his liability to be registered. Now, this is also a legal requirement. If somebody is feeling, okay, I'll be reaching to this threshold within 15 days of reaching that, you must notify to Inland Revenue Department and get the VAT registration. Okay, we'll move to the next one. In computing the value of supplies determined the above threshold, the following should be excluded. Again, I am telling, exempted supply should be excluded, and any excluded supply of local buying and selling activity where the total supply of a period 3 months or calendar exempt under the first schedule act is more than 12.5 million. So you can see here, other than 12.5 million, any supply of Yeah, if the CGIR is satisfied of the following, any following situation, he may cancel the registration. The registration person has ceased to carry on a taxable activity, or the total value of taxable supply does not exceed the liable threshold, or the continuation of registration may impede the protection of revenue, because continuously no income to the Inland Revenue Department. The facilities under the customs ordinance in respect of such person have been suspended by the Director General of Customs. So in these situations, Inland Revenue Department may cancel your VAT registration. Just try to keep it in your mind for the exam purposes. Right, we'll move to the next one. Duties and responsibilities upon cancellation. So what are your duties and responsibilities upon cancellation? Any goods or services if you registered, if you apply for the cancellation, upon cancellation, registration by the CGR, such person shall return the registration certificate to CGR within 14 days. That means for Commissioner General of Inland Revenue, we must submit our cancelled VAT or the VAT registration certificate to the Inland Revenue Department, and stop displaying the certificate of registration, and stop issuing tax invoices, debit note and credit note. Those are the things that you need to do, right? And in case of zero rated supply, irrespective of whether the relevant supply is listed in the exempt supply, it shall in all other respect to be treated as a taxable supply, and tax is to be computed at the rate of zero. I think I told this before also. What you need to understand here, zero rated mean for supply, the value should be applied as zero. But only thing is, allowable input can be claimed, and a refund can be claimed from the Inland Revenue Department. But however, for the VAT exempt supply, you need to remember no input tax is allowable. In the case of imports and export, irrespective of the value of supply, registration should be applied. So this is what I told even at the beginning. So it's very simple. If you are going for the zero rated, yes, you can claim input VAT, exempt you can't, right? Minister's power to change the rates. Now you might wonder, I told earlier the rate was 15%. For your exam purposes, they will be testing that 15% rate, but right now the rate is 8%. Who is having that authority? The Minister of Finance. The Minister, by publishing an order to in the Gazette subject to the approval of the Parliament, may vary the VAT rates specified in the law. Even in future, they might increase the VAT rate because the Minister is having that authority. Right. Excluded supply. Now I have already discussed two concepts. What is mean by zero rated and what is mean by exempt. Exempt, I'll be giving some examples as well. Excluded mean what is that? The tax shall not be charged on wholesale or retail supplies of goods other than on the wholesale or retail supply of goods buyer. Now it's very clearly says other than. Manufacture of such goods, then you can. Importers of such goods, you can. Likewise, they have given, you need to look at, okay, whether wholesale and retail is there. If any organization, any person is there which is fallen into this category, who is not fallen into this category, are coming under the excluded supply. Now you can see here, any person, partnership having total supplies consecutive period of 12 months, 12.5 million, not less than 12.5 million. So less than 12.5 million, yes, you have to exclude. Not less than 12.5 million only acceptable, because it says other than on wholesale and retail supply. So in your case, what you need to do when you are making your VAT calculation, if you have excluded supply, because I'll be showing you how to file the VAT return. In there also, you have to mention a separate page called excluded supply, where you need to put that amount if that particular category is coming under this, right? Then I told you about the exempt supply. This is another example. This is a good example for exempt supply. Supply of import of wheat flour, agricultural, energy saving bulbs, and educational services. Remember, if a tuition sector or else the education sector is VAT exempt, public passenger transport services VAT exempt, locally manufactured coconut oil. Likewise, if you go through the Value Added Tax Act, there is a separate schedule, exempt schedule is there. It's a whole list we need to go through, because for your exam purposes, very few items are listed here. Right, we'll move to the next one. How to do the calculation, basis of computation. What you need to do, you have to get the output tax, and you need to deduct the allowable input VAT. I can't see whether the students are interactively joining with me. If you are joining with me, if you are interacting with me, just put a heart mark. Okay, I'm getting it. Okay, I thought I'm alone doing this one. Right. Anyway, it's good you are touching with me. Right. Then output tax is there. Then allowable input tax you can deduct. Then you are coming to the balance payable. So output tax means the VAT computed on liable supplies, and input tax means VAT paid on purchase of goods and services consumed. It's very simple calculation. You need to put the output and you need to deduct the input, then you are coming to the balance payable, right? This is another method that you need to remember. Now, as per your syllabus, as per your exam purposes, we are having two rates. One is zero rate and the 15%. But if you look at the practical world, now the zero rate is there. In addition to that, the rate is 8%. So that's what you need to remember. And there is another mechanism which is considered only for some of the manufactured some of the items, that is for rates, or else we can say per piece they are charging how much the VAT. For an example, for sale of export oriented manufacturers within the limit permitted by the Board of Investment of Sri Lanka, VAT should be paid a special rate based on the number of pieces product. So it's not depend on the total supply, it for the number of pieces. So 75 per piece other than panties, socks, briefs and boxer shorts. So likewise, they have specifically mentioned a value per item, per piece, not for the whole value, right? That also you need to remember. Then we'll move to the next one, adjustment, because frequently these are the practical scenarios, because the bad debts can be there. In some cases, when you are calculating your taxable supply or else taxable payable amount, in ascertain the amount of tax payable, the amount of tax of bad debt incurred in the taxable activity can be deducted. That means basically if you have any bad debts, you can deduct. But there is another rule. If subsequently receive that amount from your customer, that should be treated as a taxable supply during the taxable period in which it was received and shall be liable to tax. I think you got the idea. So if any bad debt is there actually incurred, you can deduct when you are calculating your taxable payment amount. And at the same time, once you receive that amount after you write off, then at that point you must pay VAT for that one. Another most important adjustment is for credit notes and debit notes. Now there can be situation where you need to issue credit notes if you want to reduce the supply value, and there can be situation where you need to issue debit notes as well. So the law says you can do this mechanism only within 6 months of the original invoice issued. So remember that one, debit note or credit note is to be issued within 6 months of the original invoice to adjust the input tax. So these are the basic things that you need to remember, right? We'll move to the next one question. Right. Right, very good. You actually listen to me very carefully. That's why you have correctly answered that question, because I have explained it many times. When you are providing service or when you are selling goods, and at the time of issuing your invoices within 10 days of the providing of that service or dispatching the goods, the time of supply is not the supply of service, not the date of supply. You have to consider the invoice date, right? So that's what the correct answer is, invoice date, right? We'll move to the next one, composition of a tax invoice, what you need to include in a tax invoice: the name, address, and the registration number of the supplier, and the name and address of the person to whom the supply was made, and date on which the tax invoice was issued, and its serial number. So this is very important. Yes, first few things are anyway, those are mandatory. You need to put the name, address, registration number, and address as well. So why the serial number? So you must know the concept behind this, or else what is the rationale behind this. Now serial number mean, now you need to put 1 2 3 4 likewise. Now in that department may ask you to uh, show the whole tax invoices that you have issued. In a situation where, just imagine, if you are not maintaining serial number, then inland revenue department also can't trace your total income. So serial number is very important. If serial number is missing, it says you might not declare the full income. So this has happened in practically in many instances. Inland revenue department is more focusing on the serial numbers, whether it's continuing properly. If serial numbers are missing, they might think you have not declared the income properly. Okay, and the date of supply and the descriptions of the goods or services, and the quantity or volume of the supply, and the value of supply, tax charge, the consideration for the supply, and the most important thing, the word of tax invoice. You must mention the tax invoice wording in the invoice. If it is mentioned only a invoice, it's not a valid tax invoice. Keep it in your mind. Tax invoice you need to put in your invoice. Right. We'll move to the next one. Right. Tax invoices on importers. Tax invoices where the goods have been imported into Sri Lanka, the custom goods declaration or any other document authenticated by the Director General of Customs shall be treated as the tax invoice. Now, you can easily remember this one. When you are doing import and export business, basically import business, the source document is CUSDEC. That is we call Customs Good Declaration. Short form is CUSDEC. But retaining copies of tax invoices, the original of the tax invoice shall be issued of the person to whom the supply was made, and duplicate of such invoice shall be retained by the person who makes such supply for a period of 5 years. This is, you again, you need to remember all the VAT related documents, invoices you need to keep for the 5 years after the expiry of taxable period in which the such invoice was issued. And whether are you in position to issue copies of tax invoices? No, it's not possible. It shall not be lawful issue more than one tax invoice for each supply. If a registered person claims to have lost of, if he lost the original tax invoice, then what he can do is, the particular supplier can give another invoice, specially mentioning it as copy only. So you can't issue another tax invoice. That is what you need to remember. Okay, we'll move to the next one. Right, registration input claim. Input tax attributable to services received shall not be deducted in respect of the following: in supply of motor vehicles, purchase price other than motorcycles, bicycles, motor coaches, providing employee for the transportation of his employees. Basically, here the motor vehicles you can see, not for the public transportation. Motor vehicle used for excursion tours or the transportation of tourists, or the transportation of goods, or hiring cars on a motor vehicle, or forming part of any stock in trade of taxable activity. So just you need to remember that as well when you are claiming input VAT. Then the supply of goods and services received is not connected with the taxable activity. There can be some services which are not connected with the main taxable activity, that also you will not be able to deduct. Right, we'll look at the next one. If supply of goods or services received is not supported by a valid tax invoice, remember when you want to claim your input VAT, you must have a valid tax invoice, or else you must have the CUSDEC. Another most important thing, in even in your exam also this can be tested. For local invoices, that is valid only for 12 months. 12 months. But for CUSDEC, that can be claimed in your VAT return 24 months, basically 2 years. So this is what you need to remember. local invoices, you can claim for a 12 months period, that means within a year. And the cusdex, you can claim within 24 months, that means 2 years. Right, we'll move to the next one and see the calculation part. Filing of VAT return. Every registered person is required to furnish the VAT return. Revenue Department last day of the month after expiry of each taxable period. Say for an example, if you're going for a monthly basis, April return you must file before 30th May. So that's the law. And if you're not complying, up to 50,000 per return you need to pay. And payment of tax, again you need to remember, now the payment due date for manufacturers is 20th of every month. The following month, say for an example, April month, you need to make that payment on 20th of next month. And quarterly taxable periods, quarterly, because I told now there are two categories. One is monthly basis and another one is quarterly. Monthly one also, once they finish the month, next month 30th they have to make it returns. And quarterly also next month 30th. For payments also, monthly basis 20th and the quarter basis, quarter and balance by the 20th of month immediately after the quarter. But remember, non-manufacturers, for during the last year there was a category where you need to make it for 15 days. First 15 days you need to make by before 30th of next month. Then the last 15 days of a month, following month before 15. That was the category earlier we had, but now this also has been changed. Even manufacturers and non-manufacturers, everybody now they have to make it on the make the payments on 20th. So that's the current law. Right, we'll move to the next one. These are simple example for you to get some sort of idea how to do the calculation. And but I urge you to go to the go through your study manual, because study pack is having a lot of examples. Out of that you can get good idea, but this is only one sample example for you to get some sort of idea. uh, Now you can see VAT registered person liable for VAT 1.4 million supplies to non-VAT registered person. Now there can be situation even if you have already registered for VAT, but the people who are getting your services are not registered for VAT. For that people also you need to make the VAT. So that's what the particular example says. Another category called non-VAT registered person, and at the same time you have imports of lorry, purchase of staff meals, purchase of raw material, purchase of raw material not supported with tax invoices, electricity, staff salaries and wages. Now we'll see how we have calculated this one. Right, now as I told you, on supplies liable at the standard rate, but I have done both supplies I have added and divide it by 115 because it's inclusive value. So multiply by 15, I got 530,625 and paid at a standard rate. I think all of you can remember the vehicles, lorry, it has been exempted. Now you can see exempted. Staff meals, that is not allowed because that is not connected with the business, I told you. Then raw material also, again you need to get, because this is inclusive value, you need to divide by 115 and multiply by 15. And raw materials without tax invoices not allowed because you don't have the supporting documents. Electricity is VAT exempted, you can't do. Salaries and wages, no VAT. So total you can see 67,500. Once you deduct it, balance payable is 463,125. So it's the basic calculation, but in your cases there can be some of the points can be there, but only those theoretical part you need to go through, what kind of expenses you can deduct and what you can't deduct. Right. Right, this is a small video of Inland Revenue Department how to file VAT return practically. Just watch the video.
Welcome to this module. In this module you will learn how to file VAT.
Right. We'll move to the next part. Right. You can see now we have discussed up to now value-added tax, how we calculated, and all the calculations also we did. Now I am going to discuss with you what is mean by SVAT scheme and what is VAT on financial services, that is we call VAT on FS, and tourist VAT refund scheme. Those are the three things now we need to discuss. So again, you need to understand what is mean by SVAT. I just explain you. SVAT mean basically, earlier, can you remember I told one example with regard to section 22(7, condominium property, they are providing that service, but during the construction period, they are not in position to claim the input VAT. Now with that, earlier mechanism of Inland Revenue Department was to refund those taxes if at the time of they are making payment, and after that they are refunding. And in order to simplify the VAT system operation to minimize the transaction with regard to VAT collection and refunding, new system called SVAT has been introduced with effect from 1st April. According to the new system, there are two people. So what are those? Who are those two people? One is we call RIP, that is we call registered identified purchasers, and the other person is RIS, registered identified supplier. Now, just try to understand this concept. I will explain you by taking a small example. Now, just imagine I'm doing a construction project, and I'm registered under the section 22(7. Now, I am getting all the raw materials from another person. He is becoming the RIS, registered identified supplier. I am registering as the RIP, registered identified purchaser. So who can register as RIP? These are the people who can register for RIP. Just look at it, have a look. Exporters of article as well as services, zero rated suppliers. If you are coming under the service zero rated supplies, yes, you can apply for the RIP. Or else registered person engaged in any strategic project. Okay, that is also covered. Person engaged in any specific project. Yes, as I told you, you can see any persons registered section 22(7 also applicable. Now basically what you need to understand, I'll take the same example again. Now if I am registered for section 22(7, I can apply for RIP category, registered identified purchaser. Now who can be RIS? Sorry, who can be RIS? RIS basically can be the people who are providing that services to RIP. Right, we'll move to that. Before that, there is a small question. Just look at this one. What is the VAT rate in Sri Lanka with effect from 1st December 2019? Right. You didn't listen to me properly. That's what I saw. Because I told 15% is applicable only up to 30th November. Right. Now, 1st December onwards, the rate is 8%. But you need to remember, this rate has been changed from December onwards, but the threshold has been changed from January 20 onwards. But anyway, 50, you are saying 8% and 50%, but the correct answer is 8%. Right. Now, we'll look at who is RIS. RIS means people who are providing that services to RIP. In my example, I am doing section 22(7 project. Now, there is a person who is providing, what do you call, we'll say, we'll take construction services. I have outsourced it to one construction company. So they become RIS. I'm RIP. So whatever the amounts that I am making to him, will not make under this situation. Under the SVAT scheme, what will happen? RIS is issuing an invoice to RIP. That is we call suspended VAT, simplified under the simplified VAT scheme, suspended tax invoice. That suspended tax invoice mean, I'll tell you simple example, just take the value as 100 rupees. So RIS is giving a 100 rupees invoice to RIP. Now they will be putting 100 rupees is the supply, 15 rupees as VAT, but they are putting the suspended VAT. Then you are getting 115 rupees invoice to RIP, but RIP is paying only 100 rupees to RIS. For balance 15 rupees, they are giving a document called credit voucher. This mechanism we call SWAT. Very simple. RIS is there, RIP is there. RIS is providing some service to RIP. Then they are sending not the tax invoice, they are issuing only the suspended tax invoices. Once they issue that suspended tax invoices to RIP will make payment only for the supply value, not for the VAT. Instead of that VAT value, rather than paying that amount, they will issue a document called credit voucher to RIS. Right. This is what happened in SWAT process. Now, why they have introduced? This is I have given the whole thing. I have elaborated here. What you need to understand the concept. Just in your book, just have a sketch diagram. That's more than enough for you to understand this one. RIS is providing services to RIP. So they are putting invoices, suspended VAT invoices to them. So 100 rupees, 115 they are putting to them, but they are making only 100 rupees. For 15 rupees, they are giving the credit voucher. So the objective of this mechanism is to reduce the administrative burden to Inland Revenue Department. So they are not making refunds, only the exchanging a document among both parties. That's what happened in this VAT system. So these things you need to understand, right? Next one, we are moving to the VAT on financial services. VAT on financial services mean all the finance organizations, basically, you can see here, who is liable? All the people who are involving in finance business. Now, you can go through your study pack. They have specifically mentioned all the banks, finance institutes, and everything is there. But in addition to that, if somebody is doing that financial services, even if he has not registered as a company or a business organization, they are also fallen into this category. So VAT on financial service, the method of calculation of VAT is totally different from the normal VAT. And the rate is very important. Here the rate is 15%. In your exam purpose also 15%. But even as I told, the rates have been changed with effect from December, but this VAT on financial services rate didn't change. So that will continue as 15%. But anyway, for your exam purpose, the rate will be only the 15%. The method of calculation is totally different, but in your stage, we are not touching how to calculate that one, right? Then registration requirement, similar to the other requirement, similar to the normal VAT registration. Financial service shall exceed 3 million per quarter and 12 million per annum. And filing of VAT return, similar to normal companies, normal VAT registered person, before end of the following month of the taxable period. So that's what you need to remember. Okay, right. We'll move to the most important other area, that is we call tourist VAT refund scheme. So what is mean by tourist VAT refund scheme? This is a scheme where we can see in other countries. If you go to the Singapore, if you go to the Thailand, they have system called VAT refund scheme. So this also introduced Sri Lanka very recently by understanding that we can capture many tourists to Sri Lanka if we introduce kind of a tourist VAT refund scheme. Now, in other countries, how it operates, if you go to a country like Singapore, when you buy the goods at the time of your because you need to anyway make the payment for VAT, but when you are coming to Sri Lanka at the time of departure, then there is a counter where they are refunding your VAT amount. The same thing is happening in Sri Lanka. You can see here, tourist VAT refund scheme actually introduced on 11 September 2018. And what happens and how it operates, basically, we have a video. I will show you how it operates step by step. But you need to remember, there are only very few people eligible for this refund scheme. Non-citizen and non-resident of Sri Lanka, because Sri Lankans cannot get these benefits. You must be a non-citizen and non-resident. Stayed in Sri Lanka for less than 90 days. And under visit visa, visa issued by the Control General of Immigration and Immigration, and should not be less than 18 years of age as of the first day his visit Sri Lanka, because even for children they can't get this benefit. This is we call TBRS. Right. So what are the conditions of this TVRS? A tourist is required to have a minimum of 50,000 worth of VAT liable purchases for this one. If somebody is less than 50,000 rupees, you are not eligible under this stream, and consisting of maximum 3 commercial invoices issued by the same day. And this is there in the video where you can see. And tourist has to apply for the VAT refund using TVRS application form, and goods should be taken out Sri Lanka either in baggage or hand luggage. Right, we'll look at the video to get the clear idea.
In Sri Lanka, if you are charged 50,000 Sri Lankan rupees in VAT after making purchases at an authorized retailer who displays tax-free shopping logo, you are entitled to claim VAT refund when you leave Sri Lanka. You are eligible for tourist VAT refund scheme if you fulfill the following criteria.
A non-citizen and non-resident of Sri Lanka stayed in Sri Lanka for less than 90 days, and a visit visa issued by the Controller General of Immigration and Immigration of Sri Lanka should not be less than 18 years of age as the date of you visit Sri Lanka.
Let's look at what are the conditions of tourism VAT refund scheme.
Number one, you are required to have a minimum of 50,000 Sri Lankan rupees worth of VAT liable purchases. That is exclusive of VAT. Under that, there are two criteria. Criteria number one, consisting of maximum 3 commercial invoices issued on the same day by the same retailer. Criteria number two, need to obtain VAT refund invoice, that is called TVRI, from the same authorized retailer by providing commercial invoices along with your passport. Number two, you have to apply for your VAT refund using a TVRS application form. Number three, goods should be taken out of Sri Lanka either as a baggage or hand luggage. Please note that the goods declared in the above invoices should be available for physical verification of the custom point.
Goods eligible to claim under tourist VAT refund scheme.
All goods on which VAT is charged, that is standard rated goods, are eligible for a refund, except number one, goods that are prohibited on aircraft for a safety reasons. You can check with your airline for prohibited items. Number two, goods that are prohibited and restricted under Sri Lanka Customs Ordinance Act. Number three, VAT exempted goods, that is where VAT was not paid. Number four, goods that have been wholly or partly consumed in Sri Lanka. For example, foods, beverages. Number five, services consumed. For example, hotel charges. Number six, goods purchased online and taken out of Sri Lanka. Number seven, goods that are not presented for inspection with the required application form at the TVRS counter.
Where to claim refunds?
The TVRS counters are located at the Bandaranaike International Airport, Katunaika, Sri Lanka.
How to claim TVRS refund?
You can make your claim for a tax refund by visiting a TVRS counter at the point of departure.
Let's summarize entire TVRS into 3 steps.
Step number one, present the following documents to the TVRS Customs Verification Counter with goods entitled to claim refund. Number one, completed tourist VAT refund claim application form. Number two, original tourist VAT refund invoices, that is TVRI, with specified commercial invoices. Number three, valid passport. Step number two, upon custom verification, submit the above documents to TVRS Inlet Avenue counter for a refund claim. Step number three, submit the payment voucher for processing to the Bank of Ceylon branch located inside the departure lounge. Your refund will be paid in cash.
Right, the last question. Congratulations, Nimrati. I think you won the session. Then you can get the particular book I told you. You can collect it from AAT Center in Colombo. Even if you're very close to Kandy, you can collect it from Kandy as well. Anyway, congratulations. But many of you have understood it incorrectly, because I asked VAT return for exporters, it should be filed monthly basis. The correct answer is that. Right. Anyway, it's time for you to raise the questions. You can use your mobile to ask any question, or else you can ask the chat option also. Somebody has asked TVRS and VAT related financial companies tested in exam. It's there in the syllabus, TVRS and VAT on financial services. Uh, there's a possibility of asking some questions on that area. Any questions? You can try from the both ways. Either you can come from the mobile, or else you can use the chat option. Okay, I hope no questions. Shall we move to the wind up session? Right. I don't think no questions from your end. Right. Now it's time for you to rate our presentation. How are you feeling today? What is your idea? This is very important for me. Okay, right. Thank you very much for your feedback. I think you have ranked me as the good and excellent and okay also. So that means basically you understood the concept, and hope you got good idea. But again, you need to remember, just go through the study pack again and again. That will be really helpful for you, because most of the examples and everything is there. Okay, thank you very much for your participation.
Okay. Thank you very much, Mr. Viraj. I think this session would definitely help our students to excel their knowledge in VAT. So I would like to thank again Mr. Viraj for his tremendous service. So our next webinar will be conducted tomorrow as usual. You can pass this message to your friends to join the session tomorrow. And until then, I would like to request you to be at home and be safe and study well and prepare for the exam. Winding up the session.